Hi guys, happy Thursday. Welcome. Let's see if we're live. Let's see. Are we working? All right, looks like we're good to go. Hopefully you can hear me. I like to test that. Let's see if we can hear me. I'm a little late today, which I have been taking pride on being on time lately, but today my daughter texted me at like 9:57 because she can't find the homework that's due today. So I needed to go on a hunt. So that's where I was. So, but I'm here now. Yay. All right, let's see. Can we hear us? Yes, we can. All right, welcome. All right, we're going to close that up. All right, guys, today is Q&A day. This is like my favorite day because I don't have to plan for it. You guys send in your questions, I answer them, and there's no prep. So there's less work for me. So I love Q&A days. But yeah, real quick, if you do not know me, I am Bree Beers. I own Bree Beers and Associates in Denver, Colorado. We are a Denver-based accounting firm where we specialize in tax advisory services, but we work with clients across the country. And while we do tax prep, we really are moving into the tax advisory and tax planning piece of this realm and trying to help small business owners save a few bucks on their taxes each year so that they can reinvest those dollars back into their business, into themselves, into their retirement, whatever it looks like to you. So that is our goal. If you are watching live, I see there's a couple of you on. I don't know if you're on Facebook or YouTube or LinkedIn, but if you are live and you have questions, just stick them in the comments, and I always will answer those first. If you are watching this on replay and you submitted your questions, that is where I will go. I will go to the submitted questions that for people who DM'd us on Facebook next. And then I have just some other like legit FAQs that I can end with if we have extra time. So that's kind of the order we go in. And what else do I have to tell you guys? Nothing. So let's jump in. All right. I do want to, I know I'm trying to focus on tax planning and kind of advisory questions, but there's a few really good ones that I've gotten a couple different versions of this question in. So I want to reach out to those, or I want to address those first. So first one, I've gotten two of these. It's what if I receive a notice from the IRS? All right. And you guys, you as a tax preparer or a taxpayer might receive a notice from the IRS. You might also receive one from the state if you live in a state that pays income tax. So if you live in Colorado or I think there's 8 states that don't pay income tax, but you could receive a notice from your state taxing agencies too. And these notices can vary, okay, in terms of what they're asking or what they're requesting or what they're telling you to do. All right, so the first thing is, if you do get a notice from the IRS, don't panic. All right, don't panic when you get these, but know that you want to deal with them timely. All right, so don't panic, but also don't avoid. All right, I can't tell you how many times we get clients who are like, hey, I got this IRS notice a while back. And we look and it's like 3 months old and the resolution date was a month ago. And at that point, if you miss those deadlines, you guys, it's a lot harder to resolve those issues as easily. Okay. So when you get it, don't panic, but don't procrastinate. All right. Read the letter carefully. All right. To really understand the issue. Sometimes, like I said, the most common ones that we see are you owe additional money, right? We got your tax return, but you owe X amount of dollars more than what you filed. And usually in that case, there'll be a comparison of here's what you filed, here's what our records show. Sometimes you will get a request for more information. These are becoming a little more common. And they're just saying, hey, we need to verify. Sometimes it's to verify your identity. Maybe there is a potential ID theft issue. Could be for multiple reasons, but they might just need a little bit more information to verify your identification. Sometimes it's a notice that says, hey, you requested this credit, but you didn't, we didn't receive the form, XYZ that supports that credit. Please submit that. So The most common types of notices that we see from the IRS are requests for more information or notices of like, hey, what you say what you say your tax is isn't what we say your tax is. All right. So let's start with the more information pieces. All right. So a lot of times, like I said, they're just asking for more information, either to grant you a credit or a deduction or to verify your identity and release your refund. Okay. So when it's that, just follow the directions. All right. You follow the instructions, and if needed, you can contact. If you need to contact the IRS, you can. But follow the instructions. A lot of times, they're just like send this thing in, send this form in, send a copy, whatever. I want to back up a little bit because the first thing you want to do when you receive an IRS notice is actually figure out if it's legit. Unfortunately, our society is filled with all types of scams, and an IRS scam is one of the main ones, or not a main one, but it's becoming more popular. The first thing I want to say is the IRS will not call you. All right. The IRS will not text you. The IRS will not even email you. So if you get correspondence from the IRS via any of these avenues, you can ignore it. They will always mail you requests and notices. All right. From there, the ways you can look to make sure it's legit is just, look at the address, Google that address, see if that's actually a legit IRS address. If you have a tax preparer, guys, let me start. If you have a tax preparer, ask them, I got this IRS notice. Is it legit? And what do I need to do? All right. Your tax preparer can give you some guidance. If you're a client of BBA, we have audit protection for all of our clients. So if you're a client of BBA's for this year, or if we did your 2024 return or your 2023 return and you receive a notice, you send it to us. We have an amazing third party that we send it to that handles it. All right. They're going to have to, communicate with you, get some information from you as the taxpayer, but they're going to be the ones that can this is fake, this is real. We're going to deal with the IRS. We will do the legwork and resolve this for you. So if you receive a notice from the IRS, don't panic, but don't procrastinate. All right. If you have a tax preparer, send it to them, ask for their advice, and go from there. Cool. All right. Another one. How can businesses avoid tax audits? All right. This is a very broad question. All right. And and businesses or individuals, you guys, the question is, how can I avoid a tax audit? How can I avoid an audit? And the main way you can avoid audits is by filing accurate and complete returns. Okay, that is how you minimize your audit risk. All right. Now, you may fill out a perfectly, well done tax return. It may be filed properly. You may have all the proper, worksheets and schedules, and you may have everything on the same line, but there might still be something that the IRS sees that makes them pull your file. Sometimes it's random, you guys. They actually still, some audits are random. All right. But the best way to avoid or minimize your risk of an audit is to make sure you're filing accurate and complete returns. All right. And the best way to do that is to have a solid accountant do it for you, right? Whether it's a CPA, a tax professional of some sort, but vet your accountant and do it, because out of, the tax returns that don't have a red flag due to high deduction numbers or maybe a high income threshold, anything like that, those are mostly self-prepared returns. All right. Because unless you just have a W-2 or you just have one source of income, self-preparing your return can be risky. Because I don't know about you, but I can still remember back to years before I was an accountant, right? I was doing it on TurboTax, and it just asks you these questions, and you watch the little number turn green and go higher, turn red. And I remember not knowing what I was doing, but clicking the buttons that just made the green number get bigger, right? There's no way I was doing it right. But I was like, how do I get the most money back? And I would just click those buttons. I had no idea what I was doing. That's what a lot of people do. And I'm not saying, a lot of us aren't out there just trying to maximize our refund, but if you're self-preparing, raise your hand if you've been self-preparing and you come across a question, you're like, I don't really know what they're asking here, and you're not really sure and you guess, or you push each one and you pick the one that is more beneficial, right? Like, why wouldn't you? But if you get someone, get a professional to help you with it, it's more likely to be accurate and complete. Other things I can recommend to you guys is, this doesn't necessarily minimize your risk to an audit, but maintain thorough records. That way, if you do get an audit or an examination request, you don't have to spend hours upon hours, finding receipts or finding proof or rebuilding records. You have it all right? Because audits and examinations and even notices, right, that say like, hey, you owe money, can be stressful. But if you have thorough records, you have everything organized and in place, it's easy to be like, no, like, we did this right. Here's we can prove to you. Okay. So the other thing, make sure you report all your income. All right. Especially if it's income that's reported on a form that is given to the IRS as well. Okay. Yes, W-2s, but 1099s. So many times, you guys, we get client, like, not just, there's your 1099 NECs for contractor work, right? There's your 1099 miscellaneous for money you receive for miscellaneous reasons. You might get a 1099 for rent received, but also your brokerage statements. All right. If you have investments and you receive 1099s, that information has to go in your tax return, because that is the easiest. That is the first check that the IRS does. All right. When you file your return, is they pull your transcripts, they pull all of the income records for your social security number, and they make sure that all those numbers are somewhere on your return. And so that is the easiest way to get a notice that you are wrong, is to miss income on your return. All right. So make sure you're reporting all income. I'm going to tell you to make sure you're reporting all income, but I will give the caveat of, like, especially if it's on a form that is reported to the IRS. All right. Because that's an easy flag for the IRS to raise. All right. And then another common suggestion for avoiding audits is avoiding excess deductions that can trigger scrutiny. And this is where every single tax professional is going to have a different stance on this. All right. There are some very conservative accountants out there that are like, I don't even know. They're very conservative. They're very like, you can't take that. They tell you not to take home office because you might trigger an audit. They tell you, not to take, all of your meals because because that might trigger an audit. And then you have the other spectrum that's like, report everything and who needs documentation, right? We'll worry about that if we get there. There's a big middle area. In this big middle area, it's essentially like your risk tolerance for, like, how much are you willing to risk compared to how much you're saving. Okay. And then finding a tax preparer that aligns with that risk tolerance. All right. Because there are some deductions, there are some, strategies that may get questioned. And so you have to, prove it, right? They may be like, hey, we see you took, you hired your kids, right? And so let's look and make sure that you actually have your kids working in your business, right? And I think that's an area that is probably going to become a little more looked at as hiring your kids becomes a more widely spread or widely used tax strategy. But that doesn't mean you shouldn't hire your kids and take the tax benefit. You just want to make sure that when you do, you have your ducks in a row and you have your records in a row, so that if they do ask, you say, yeah, here's their timesheets. Here's, we ran their payroll. Here's the copies of their W-2. That's it. Like, just proving that it's legit, right? Because there are people out there, 100%, that are just putting their kids on payroll and paying their kids an amount, and their kids have nothing to do with the business, right? 100% there's people out there doing that. All right. But that's not us. That's not us here. If we're hiring our kids, they're doing work in our business and helping us, in our business. And so if we were to get, examined for that, we're just like, yep, here's my kids' timesheets. Here's, whatever else document, but timesheets and payroll. Like we did it legitimately and they are working. And they're like, okay, great. Okay. So that's, let's talk a little bit about that tax planning and strategy, because this is a lot of those kind of questions are coming in, like I've heard of hiring my kids. Should I be an S Corp? What is the Augusta rule? So I will tell you that starting next week, we're going to start diving into these are what I call the tier 1 tax strategies. These are strategies that I believe all of us can use as long as, we qualify. Can't hire your kids if you don't have kids. But if you have kids, you should be hiring them. You should have them work in your business. You should take that tax deduction. All right. S Corp. We'll talk one week about what does the S Corp actually do? Why do people say it's a tax saving strategy? What does it save taxes on? And who should be considering this? Now, S Corp is one where, again, there's accountants along the spectrum. Some accountants are like, unfortunately, they're like, it's low hanging fruit. It's easy to be like, hey, S Corp will save you this much money. And they do it. And then they let you as the business owner be like, okay, bye. And they don't train you on what it actually means to be an S Corp, right? They just show you the tax savings and they do it. They don't show you the pros and cons. That's not how we operate at BBA. Because S Corp is one that, yes, it can lead to substantial tax savings depending on what your business looks like. But there are additional responsibilities, some additional expenses that incur when you convert to an S Corp. All right. So that's a conversation. So what I will tell you is, if you have an accountant out there who's like, yes, you should be an S Corp, it'll save you this much money, be like, is there more to it than that? Ask some clarifying questions. Let's see. Okay, these are not tax strategy, but these are ones that are they're timely. When can I expect my tax refund? So I was pleasantly surprised that the IRS refunds were not super delayed this year, for the most part. So I will tell you that the IRS issues most refunds within 21 days, because when operating under normal circumstances, the IRS issues refunds every other Friday. All right, so every 14 days they issue refunds, but they have to process your return. And processing time this year was pretty, most of our clients were getting their refunds within that 21, maybe a few more extra days than that. The closer you get to that April 15th deadline, the more likely there's going to be it takes a couple days longer for them to process. What you can do, always make sure you're e-filing, whether you're e-filing through like TurboTax or H&R Block, or you're using a tax preparer, because honestly, by paper filing or having errors, those are the two ways that delay processing. Paper filing and errors are what will delay it. But what you can do, you can go to Where's My Refund, which is it's on the IRS website. You stick in your vitals and it'll tell you where the IRS is in processing your return. It'll say received, processing, I think, is the common one. That means they're working on it. Processed means it's done, and within the next few days you should have an ETA on that IRS or on that refund. And then once issued refund, whatever. So Where's My Refund on the IRS website is a great tool to utilize. All right, another one I got that feels timely again is, what should I do if I can't pay my tax bill on time? And we've kind of talked about this, I don't know, in the last couple of weeks, but I get a lot of clients that we have to educate on that say, hey, I need to file an extension because I can't pay yet. All right. But it's important for you guys to remember, and I know if you've been here before, you've heard me say this, but when you file an extension with the IRS, that is an extension to file, and therefore you avoid failure to file penalties, but it is not an extension to pay. So if you file an extension and you owe money, you are going to start accruing penalties and interest starting April 15th for failure to pay. Now, failure to pay is like 0.5% per month, I think, of a penalty, whereas failure to file is 5% per month of what you owe. So obviously, like even if you can't pay, like file the extension so that you're avoiding that. But what I tell my clients is file your return as soon as you can. Okay, so you get it done, it's off your plate. And if you can't pay, set up a payment plan with the IRS. Guys, you can actually do this online now. You don't even have to call them anymore. You used to have to call. You can do this on the IRS website now. You can set up a payment plan, right? You can do short-term, you can do long-term, and that will keep you kosher with the IRS. You're still going to have interest that accrues, all right, because, until you pay your debt off, but it will keep you kosher. What it does, it keeps you kosher if you have, if you're already in a payment plan, or if you didn't offer and compromise, you have to stay compliant with the IRS. A payment plan will do that, right? So it's not avoid paying it and just ignore it. Do what you can. All right. I would say, what if you can't pay your tax? The other thing is pay what you can. All right. If your bill is $5,000 and you can only pay $3,000, pay $3,000 now or as soon as you can, and then get on a payment plan for the rest. All right. If it's super bad, if you owe a ton of money and what you owe is really kind of more than what you have available, you can do what's called an offer and compromise, which the IRS will grant for financial hardships. But I mean, those get granted. They're just a little more complicated to deal with. What else do I have? To see if I have anything that has to do with tax planning. Again, we're going to talk over the next few weeks so I'll tell you, those of you that are here, those of you who are watching, I don't know what order I'm doing this in yet, but over the next, I'll tell you how many. So we're going to talk about S corps. We are going to talk about hiring your kids. We are going to talk about the Augusta rule. We will talk about, we'll probably start next week with maximizing deductions, right? For me, if you've been here before, meals and travel are two areas that I believe are underutilized in our small business world in terms of deducting those. And so we are going to talk about how we maximize those deductions. We will talk about home office and vehicle use. Those are another easy ones that we should all be benefiting from, again, if they apply. Okay, so we'll probably start with those, maximizing those deductions, travel, meals, home office, mileage, vehicle usage, and then we'll move into the actual strategies of S corp election, Augusta rule, hiring your kids, probably talk about some health insurance options, our retirement options, things like that. So we're set for probably the next 6, 7, 8 weeks in terms of trainings. Let's see. Oh, how long should I keep my tax records? So the IRS says 3 years. We tell you 7. We say 7 years. That's how long we keep tax returns, because that's how far back the IRS can go. And so 7 years is how long you should keep your tax returns and any supporting documentation beyond that. So let's see, 2014. Oh my gosh, 2024, 23, 22, 21, 20, 19, 18. Anything before 2018, you're probably safe to get rid of. That said, if you own investments or property or assets that were bought prior to 2018, I would hold on to those, especially when we're talking buildings and real estate investment. So whatever year you bought that property, I would keep those returns. I wouldn't, it's not required, but it's going to make your life easier if something happens. It also makes your life easier, not even in the case of an audit, but when you go to sell that property, making sure you're not paying more tax than you need to. So it actually benefits you if you hold on to those. All right. I feel like I have time for at least one more. Let me see. Excuse me. This one's asked a few different ways, but basically it's saying, are all tax preparers equally qualified? Other ways this was asked is, hey, like, what does it say? It says, someone quoted me $1,200 for a return, another quoted me $300 for the same return. How is that possible? So anything when you're looking for a tax preparer, you guys, I believe first, so no, not all preparers are the same. Not all preparers have the same qualifications. And I will tell you, this holds true for any industry. All right. I've seen it in accounting. I've seen it in bookkeeping. I've seen it in, my husband's a realtor or a real estate agent. I've seen it in real estate. And I'm sure you can see it in any industry that there are really good people that are, there are professionals who are really good at their job. And there are people in industries and niches who shouldn't be there. Right? I'm sure if whatever niche you guys are in or whatever industry you are in, you can say the same thing. You can think the same thing. That you can think of someone in your industry that should not be doing what they're doing, right? So there's a lot of vetting involved, all right? And that's hard because, you may meet with someone, you may ask all the questions, you may ask all the right things, and they still might not end up being a good fit for you. But so what I tell people is you can't be afraid to leave, all right? You might be working with a fantastic accountant, just, CPA, an enrolled agent, a tax attorney, a tax preparer, whatever, and you guys just don't mesh. Maybe you don't have the same communication style. Maybe you just have clashing personalities. They may be great at their job and you may be a great client. You just aren't great for each other. All right. And there's nothing wrong with that. So I tell people that you cannot be afraid to leave your accountant if it's not good, if something's missing. And whatever is missing, that's what you ask your next, when you're meeting with your next accountant, you ask, like, hey, so a lot of people, it's tax planning, tax advising. They want that and their current accountant doesn't do it. So ask that when you meet with a new accountant, say, hey, do you do tax planning and strategy? Or is that something, you can offer me, right? What I would say is avoid preparers who guarantee large returns. You cannot guarantee anything. If they don't sign your return, right? So the bottom of page 1, you'll see like every return you won't see my signature because we e-file, but you will see my name, Brianna Beers, CPA, Bree Beers and Associates, at the bottom of every return that goes out of our firm. There are accountants out there who you look at your return and you see self-prepared or it's blank. That is a red flag. Ask about that. Like, why are you not signing my return? Because the problem with that comes if they're not signing their return, then if you get an IRS notice, then they could just be like, I didn't do, they could deny. And I'm not saying that they're necessarily trying to be sleazy. It's just be careful. And then just research their credentials, right? I also say avoid accountants who charge a percentage of your refund, okay? Because the work that an accountant does has nothing to do with the refund amount you're getting, right? Nothing to do with it. So, all right. Cool, you guys. I was 2 minutes late. Went over by a minute. It's basically a wash. So next week, I tell you to join me and I tell you what, but I don't really know what we're looking at next week because I haven't done it. But again, we're going to start talking about tax strategies. And I think next week, we're going to start with maximizing your deductions, just making sure that you are running everything through your business that you legitimately should be. All right. And maximizing those deductions. Because what we say is turning post-tax dollars into pre-tax dollars. This is what we'll talk about next week. Unless I forget I told you this. It happens. So taking money that you're spending personally, right? Those are post-tax dollars. How can we shift those post-tax dollars into the business legally and ethically and make them pre-tax dollars? That's what we will start talking about next week. So I would love to see you next week. And otherwise, have a great weekend. Great rest of your Thursday. Bye, guys.